clients, I think one of the big things with exchanges is reporting. And
Sure.
being able to get information on the transactions so that we can report on income tax season. So maybe just give a quick, some information on exchanges and maybe, what ones you've used and
Sure.
what ones you found to be the best.
Yep, so there's multiple exchanges. Coinbase is the most prominent in the US. It went public earlier this year. I use Coinbase. There's Gemini, which is owned by the Winklevoss twins, the Facebook guys, kind of. There's
Don't tell Facebook.
There's Binance. Binance is the largest in the world. Binance is Asia-based. They've got a US portion. But if you want to, for example, if you want to use that exchange to buy, you need to buy into the Binance.us. And it literally won't let you. So there's a way that right there for regulation of taxes that if I try to buy a coin on Binance, the world Binance, it won't let me. I can't even download that application much or interact with it in the US. Well, the reason for that is there's different tax laws in other countries, and that's been a way for them to slightly regulate, right? To get back to point though, there's Qcoin. Kraken is a really big one in the US as well, with a K. What I like about Coinbase is, well, number one, because they're regulated, everything you do on there is public information for the IRS. So I can go through and do all the transactions I've done, which you'll see how many I've done this year. It's a lot. The beauty with them, and I'm sure the other exchanges have it too, what I like about Coinbase is that they have something called Coin Tracker. You can pay a yearly, I think it was like $180 for 1,000 transactions or less, that will literally spit out the form that I gave to you last year that shows every single transaction. It shows when they happened to determine if it was long-term capital gains over a year or short-term capital gains, essentially income tax, right, over a year. And with that, it makes me feel really positive, number one, about the legitimacy of the space, that this is, yes, I could go and I could hide money from the government, and then I can explain how to do that on a different episode. But it's not.
That could be really beneficial right now.
But it's really not worth it, and it's worth more to use it as a legitimate form, because really there's the money side of crypto, which obviously everybody talks about, but there's really the technology side that's going to take us further, and what we don't want to have happen, I think, from a political standpoint, is to watch this technology get squashed under the assumption that it's funding terrorism or tax dodges, which the truth is disrupting the financial system, and that's the real scare of the people upstairs. Whatever they tell you, they either are ignorant, they're lying, or they're supporting. And so I would say Coinbase is a really good one. There's Coinbase Pro, which you can get that the transaction fees are much cheaper for trading. On regular Coinbase, you can swap a currency, so I could take, and this is what I wanted to ask you about at some point, but I could take Ethereum and swap it for Bitcoin, and I don't believe that's a taxable event. But if I took Ethereum and sold it for US dollars, or took Ethereum and swapped it for a stable coin, which is another term we can talk about in another episode, but stable coins are essentially cryptocurrency that is pegged to the US dollar. So it's a place where a lot of crypto investors, if the market's looking volatile, they'll dump their money back into something like Tether or USDC, US digital coin, and sit it there, because that essentially moves 0.001%. It hangs around what the US dollar's worth, so that way they can take that, and some of these coins can earn 6, 7, 8% in interest as well. So.
Well, I think let's use this to kind of jump into some of the tax components of this.
Yeah.
And I think just real quick, I have kind of like 3 ways of kind of investing or using cryptocurrencies. And Chris talked about mining before. And mining is essentially, you're essentially running a business. So that is not like an investment. You're actually earning income by doing that.
You can think of it as actual mining, in a sense. I mean, when you go out and mine gold or silver or anything like that, so you're carrying on an active business. It's ordinary income, and I think that's where you're kind of...
Yep, be subject to self-employment tax potentially.
Yep.
Investing, which is I think what we've kind of talked the most about, And I think what most people are probably currently involved with crypto with, and that's really subject to capital gains, like Chris talked about. And, same rules as trading, stocks as far as long-term and short-term capital gains. A couple differences. I think one, the IRS considers cryptocurrencies property. So currently, it's not subject to the wash sale rule. The wash sale rule, essentially, if you sell a stock and generate a loss on it, you have to wait 30 days before purchasing that stock again. Otherwise, they say that loss, you can't claim that loss because you're essentially just trying to harvest that loss. That's not true currently with cryptocurrency. The Biden's Build Back Better bill does actually have that in there, that's going to subject crypto to this wash sale rule. That would take effect in 2022. So a little bit of potential tax planning there. If you do have cryptocurrency that you currently have a loss in, now might be the time to take that. You could essentially sell it, buy it right back in, and take that loss for 2021. Again, more than likely it's not going to be available in 2022. The other.
So you got 20 days.
Yeah, you got 2 days to do that. You got any questions on it? Give us a call.
That stuff works pretty quick, right?
It's instant, right?
Yeah, well, faster than your bank.
Another way that I think crypto's starting to be used a little bit more is exchange for payment. So Heinz & Clark does not accept crypto currently, but maybe Chris will pay us in crypto when we do his tax return this coming year. And that's essentially just like as if we received cash. However, that needs.
And essentially having to track your payment as an investment.
Right, so it's almost every single transaction is a taxable event. So there's and again, audience, I might be wrong on this. Alchemy Pay, ACH, I believe is the ticker, is trying to. There's others that are trying to create basically easier rails to be able to make these payments and essentially take some of these larger currencies like a Bitcoin or something and plug them into the more basic financial rail system and have an easier way to report that where you don't have a CPA firm going through literally thousands of transactions a year for one client.
Yeah, I see that as really important to be able to make that more successful.
Well, and it's an it almost takes us back to more of a barter and exchange. Perfect word that we're using there, but it's more of a barter system than ever before. I mean, if you used to get paid in sheep, cows, blankets, whatever it was, if you then sold it later on and it was worth more, you would have to pay on that additional.
That's a really interesting point. And it's the evolution of the whole. So we started off paying with seashells and then we went to silver and gold, which were essentially still fairly useless, but people agreed that there was something. The Spaniards said we like gold, and they're like, all right, well, that's worth something.
It'd be nice if we could do that with the dollar, because with inflation, the dollar gets less valuable. So if I get it today and spend it 6 months from now, do I get to take a loss on the fact that I bought and got less for it?
Okay, you bring up a really good point. I think it needs to be noted quickly here. Bitcoin, one of its major draws is that there's only 21 million Bitcoin that exist. Those Bitcoins have yet to be mined. 18 million of the 21 million have already been mined. This, by the 21 million, to your point, it makes it a deflationary asset, meaning that no more can ever be created.
Unlike the US dollar when we just print.
We print more of it. Now,
you can print the dollars?
I can't.
I believe it's 8 decimals, but an important piece too, when people say, well, I'm not going to be trading a single Bitcoin that's worth $52,000 right now to buy a candy bar. So what Bitcoin has, just like the US dollar, is a breakdown, but Bitcoin, they're called Satoshis. So that's a term that if this is successful over time, we're actually not going to be dealing in Bitcoin, we'd be dealing in Satoshis. So 0.0, I think it goes to 8 decimal points. Maybe it's 10, you can check that. But it's essentially what people would be dealing in. So, you can own a very small percentage of a single Bitcoin or pretty much any other cryptocurrency.
Is it almost like the gold backing the U.S. dollar when
100%. I mean, and they're
whether
looking,
you believe in that anymore or not.
right. Well, they know what did. Well, we stopped believing in it when the U.S. in the early 70s said that we're going out the gold standard and we're essentially going to use the U.S. military and say we are the strongest, we are the reserve currency, and the term fiat currency is something I've even been hearing used more and more often amongst everyday people, because a fiat currency is what we've been on for all of our lives. And essentially, fiat just means a currency that is backed by whatever government says it's worth something. One of the beauties
It's
of
essentially a belief system,
it's
right?
a belief system. What crypto is a system that says, in Argentina, if you've gone through the last 3 to 4 crashes they've had in the last 25 years of inflationary crashes, where my $10,000 is now worth nothing. Crypto fixes that. You look at where a lot of these Bitcoin transactions are taking place right now. It's in countries like, in continents like Africa, countries like Nigeria. I mean, where people look at that as, there's so much shadiness around there. The truth is a lot of them are run by more corrupt regimes, or at least very volatile regimes, where currencies can become devalued because the U.S. comes in and changes the leadership, or something happens. What crypto can do is essentially protect people's money as a world currency, and I think there's a lot of value to that. And by the way, the other 3 million Bitcoin that have yet to be mined, the last Bitcoin will be mined in 2140. For the last
So good time.
every 4 years they have what's called a halving, which makes mining each individual Bitcoin twice as hard. And if you lay out the math over time, mining a Bitcoin in 2010 was very easy, an entire Bitcoin. Mining a Bitcoin today is extremely hard, which is why you've had, 18 million coins released in the last 11 years, and come, 2024 is the next halving. 2024 is the next halving. It will become even more difficult, and they'll have to create new machines, and yeah.
I think we're, without a doubt, over our time.
Yeah,
but I'm going to ask a question.
I do want to cover on 2 more tax
Yeah,
things.
tax
Oh,
pieces.
okay.
Yeah.
That's why we're here.
Currently, and this was actually a couple years now that this has been in the making, where page 1 of the 1040 tax return, there's a question, yes or no. Do you invest,
They changed the question
buy,
a little bit.
sell, virtual currency?
Exchange.
Check that box, yes, if you are. We actually were in a webinar the other day, and technically you would need to amend your return if you don't answer that question correctly, which just seems really strange. But anyways, the second one is on reporting, and Chris kind of talked a little about reporting, that's why I asked the question. Starting in 2023, these exchanges are going to be required to provide 1099s to people, which I think is actually going to be beneficial. I think to Chris, your point, being able to track all those transactions and make it more legitimate, I think is only going to help benefit validate cryptocurrency in a lot of people's minds. So one, it'll make, obviously make the tax returns easier in, preparing them. But again, I think a little bit of regulation will help provide more validation with some of this.
And the government will make a lot of money from all those transactions.
So will tax rates go down? That wasn't the question. Probably a really long topic, but trying to be very quick.
Yep.
Right now, it seems like crypto and whatever coins you're into are mostly an investment. But we hear about so-and-so is going to start accepting Bitcoin.
Mm-hmm.
When do you see this becoming much more popular to everyday transactions? Is that a real thing, or is that just kind of a possibility right now?
I think it's a very real thing. I think it'll happen in the next 3 to 5 years. I think in that time, governments, China's already doing it, the Fed's already talking about doing it. There's going to be a federal coin or some sort. Basically, the fiat world, is going to go to a digital standard, which it basically already is. I mean, how many real dollars are out there anyway to back how much money, whatever. But so
There's
yes,
a lot more now. They just printed a bunch.
Yeah, I think there's going to be. They printed it with a button on a computer.
Wait, it doesn't print like a sheet of paper?
No, you should have. Do we all want to go to Wells Fargo and see how much money they can give us? Just kidding, don't do that. But so I think what's going to happen is payments are definitely digital payments are going to start to be accepted. Although we kind of visualize that. I mean, we use credit cards already, but I think that will happen. Which a lot of cryptocurrencies will go to zero. Just like internet companies back where these protocols have these grand ideas and then they don't work, but the ones that succeed, I mean, Ethereum, I think there'll be someone, Bitcoin, there'll be ones that succeed, and what'll happen then is they'll start interacting with, for example, the US digital dollar, with the Japanese yen, with,
Insert another currency.
Insert another currency, yep. And they'll start to interact. Now, how those governments decide to allow them to interact will be up to them. But one thing that I don't think the governments fully understand is it's going to be impossible to completely ban this. The only way to really ban it would be to shut down people's internet, or to really make really strong authoritarian Chinese level of lockdown on how you even allow information to travel between the world computer, if you will. So, but yes, I think it's coming. What it looks like is unclear, but it's definitely coming, and I think that's why people say Bitcoin's a digital gold, because I think it will be something that the whole world can look at and say this has a value, whatever that value is, and then you extrapolate that and you put it into these other coins that can interact with.
At that point, when you say that, it has a value, it holds a value, it becomes gold. Do you see it becoming something that doesn't fluctuate? I mean, price of gold fluctuates still, but it doesn't necessarily do what Bitcoin did. When I stopped over at your house this morning, and you're like, 2% change in 15 minutes. Yep. Gold doesn't
Correct.
move that quickly.
Right. So yes, the volatility will have to go down, and I think that will happen.
Okay.
For sure. I think the volatility will definitely happen on that, and I think one thing to consider too is we're saying Bitcoin is worth $52,000. Well, that's based on the US dollar. What happens when it's not, this is what we're going to pay, I'm going to pay $52,000 for this car, I'm going to pay 1 Bitcoin. So in a crazy world, it could come down to us literally visualizing things in terms of cryptocurrency, and fiat is just a way to interact with the local coffee shop. But if you're really doing any sort of business or international transactions, you start to see things in this currency. So it's how many Bitcoins or how many Satoshis does it cost, not how much is the Bitcoin worth compared to my US dollar, which is going to be converted into this other thing over here. Here's the standard, this is that, and...
So when you were in college and you're like, I have $10 in my pocket, so I have 10 McChickens.
Exactly. Totally. When a lot of the cryptos are based on tying to real world assets. I mean, there's
Does that include sales tax though?
Yeah, it didn't. So that was tough, but that was always findable in the car at some point. Because you're a couch, you're an idiot. Change just flew around the car.
All right. Well, I think we're well beyond our time here. Hopefully, this is valuable for people. I think this topic is, one that was probably easier for people to stay into. So I think us going over time is probably fine.
Yeah, hopefully you made it to the end without fast forwarding on the bottom. What do they end with?
And we also, I'm guessing, probably someone only scratched the surface on this too. So
NFTs. Why do you get taxed on NFTs, Steve?
Another one, another episode. So with that, you want to bring us
not
home?
the F in time, Chris. See, that's how sorry. I didn't send it anybody.
Next episode.
I should have said frickin', but I didn't even say the whole F word, so we're good. We're good. We're still professional, right? As long as you. Anyway. Yeah. So we will do another video, probably on crypto, but we'll have another topic coming out very soon. So watch for the next video. Remember to like, subscribe, comment on our socials. That's what the hip kids are saying it. The hip kids. God, how old are you?
You're old.
Old.
Even old people don't say that.
So I'm like old? It's like parent old. Like grandparent talking.
Thanks to Chris.
Yes, and thanks a lot to Chris for coming on and confusing the hell out of me. Hopefully making more sense to you guys. And we'll see you next time.
Awesome. Thanks for having me.
Thanks.
Thanks.